Good afternoon, everybody. This is Hunter Mozingo coming to you with your daily market insight video here on Friday, March 18th, a little over 10 minutes after the market close here in Jacksonville, Florida, 4:12 p.m. Eastern time to be exact. And yes, I am filling in for Don today with the big show. We got the 21 over 21. We've got key index levels. Plus, we got some stocks doing some things in a positive way that we haven't seen really for the better part of this year. So some names making some positive traction that we really haven't seen them do for the better part of 2022. So we're going to look at all of that here in just a moment. But let's go ahead and get into what just happened. So we've got the fourth day of gains. We had a weak open, but a strong close. So as you can see, we finished strong across the board here. Small caps, mid caps, G6, whatever you want to look at here, all green. But we opened relatively weak / red this morning. So let's run through the performance quickly. G6 leading the way today, relatively important, up 2.12%, S&P up 1.17, Q's up a little over 2, the Dow and mid caps both up about 0.8, Russell 2000 up a little over a 1% there, 60/40 up 0.7, and Grow up about 0.9% today. So relatively nice breadth in the market today. It wasn't one of those days where we're just seeing oils and chemical agriculture names outperform while everything else is doing poorly. We saw oils do well, and we saw some other areas do well at the same time. So we saw technology, consumer discretionary, as well as some other areas showing strength simultaneously, which is something we haven't seen all that much this year. So some nice breadth today, a nice response to a weak open. You really can't complain with the way the market has responded over the last 4 days. So that leads us to market state, which remains in cautious uptrend, just as we are 4 days up off the bottom, running into what would be potential resistance here around the 50 and 200 day on QQQ and SPY. Moving on to the trend gauge here, no changes from Don's video yesterday. So market leaders down to neutral, neutral moving towards bullish. We saw continued positive action from the leaders today. Just for example, off the top of my head, a few that acted well and had nice follow through: Tesla and Nvidia. Obviously, there are much more, but market leaders continuing to improve, and we saw that follow through today. Above the 21 EMA as of 317, we're continuing that action today. Obviously, S&P, Qs, IWM, Dow, mid caps, all above the 21 right now. Midterm or medium term, we did get through the 50 today on the S&P, running up into it on the Qs, but this is moving towards positive. You get some consecutive closes above the 50 on the S&P, and this may be moving towards neutral soon. And we're also, once again, we're moving back up to challenge that 200 day that's overhead. So making some positive ground in the medium and long term realm of the trend gauge here. Already made some nice positive ground on the short term and market leaders. So keep an eye on this next week as we go through the videos. If we do get some positive traction, you may see this medium change to neutral early in the week. If we get some continuation, we pull back and we get nice bounce, that kind of thing. But can't complain about the positive momentum we've seen this week. So before we get to the tail of the tape, let me first highlight Revere. This is me in the middle. I know you guys know this that watch regularly, but if you have any questions, just please send me an email. If you're interested in what we do at Revere, send me an email, or anybody here, Dan, Tim, Merrill, or Don at revereasset.com. So let's get into the tail of the tape here. So I already touched on market state. The headwinds remain the same as they have been for the last couple of months or so. I know some of these go back farther than a couple of months, but US dollar continues to trend higher. Inflation continues to be a persistent issue. The Fed tapering what interest rates are doing, and obviously Russia and Ukraine, those continue to be issues. The Fed and international / geopolitical tensions are going to continue to be headline grabbers. So you need to be aware of that in this market. Sentiment wise, we did see the put call come back down a decent bit and stay down. So a little bit of a positive sign here in the put call ratio, coming back under 0.8 for the first time and staying below it all day long. Really haven't seen that much at all this year. The VIX all the way back to 24, no longer above that 30 level, no longer extremely elevated anymore, coming back to a little bit more normalized levels. And the fear greed up just a tiny bit, +2 to 37, still in that fear area. Bull case as we move through this here, SPX initiate a rally and reclaim the key moving averages. So 316, follow through day back above the 21E and 4290. Today we continue to stay above the 21 and we're reclaiming the 50-day. As you can see over here, this is the S&P. So we got back above the 21. We've now had 3 consecutive closes above it. Now we got the first close above the 50. So this bull case is trying its best to follow those rules there, initiate the rally and reclaim the key moving averages. Still working on it, as you can see. Bear case would be a failure here and a harsh rollover back down through the 21. News-wise, quad witching today. Really didn't see any abnormal volatility, but once again, we have become quite accustomed to bigger time volatility in the indices over the last couple of months. Watching today, what would the S&P do if it ran up into the 50 or if it came back down to the 21? And what happened was we saw the S&P run up into the 50 and ultimately push through the 50 days. So a big positive sign, especially after 3 days up, not getting harshly rejected there and continuing the momentum for 4 solid days of closing right at the top of the range here on the S&P. Action-wise, I mentioned a weak open. We opened down about 1/3%, trended up to the 50, ultimately pushed above and closed right on the highs of the day. So like I said, about as good action as you could ask for from the S&P. Notes-wise, the SPY did go ex-dividend today, so a little bit of a skew on the price for SPY versus the actual S&P 500 today. This is the VIX's second day below the 50-day, and mid-caps and small caps day 2 above the 50-day. As I mentioned, S&P opened down 1/3%, roughly closed up about 1.2%. G6 up 2%, 60/40 up 0.7, grow up 0.9. Sector-wise, fertilizers, bio, cloud stocks, communications technology, and discretionary strong. Steel, banks, oils, defense, utilities, and staples weak. So saw some of the risk on stuff strong today, some of the risk off stuff weak. Portfolio wise, we bought SSO and we bought Sedge, took a quick profit here on QLD right before market close heading into the weekend. So just took a quick gain here on the QLD, but we did see our beta bump up a little bit from the SSO and the Sedge buy. So bottom line, no rest on the 4th day up. Market continues to impress, and that is the truth here. 3 really strong days up. It looked like we were heading for maybe a pullback or a rest, but no rest today. Just nice strong action closing at the top of the range. So moving forward here to the key levels, as I mentioned, we are now above that declining 50-day moving average, 44.32. Today, 318 reclaimed it. So above the 50, above the 21, and today's close, week open, strong finish, 4th day up. So the point here, though, back above, it looked like we were breaking below 4,200 here just 5 days ago, but really quickly we reclaimed this 4,290/4,300 area. We quickly reclaimed the 21, excuse me. So made a swift recovery on 316 and have continued that action over the last 2 days. So got back above the 21 today. We get back above the 50. Now we're going to have to work on potentially the 200-day / the 40-week, both still right here, just slightly above where we closed today, 44.71, 44.80. And that's kind of the next big challenge is what do we do when we get to the 200-day / the 40-week line, as well as this 4,500 level is obviously a very big level. That's going to be key moving forward. Can the S&P get back above 4,500 and reclaim that key level? So let's get into the charts. I know I talked about the S&P a decent bit already right here, but as I mentioned, 4 days up, right up over the 50, right up into this 200-day. What you would be looking for ideally would be some type of a consolidation, sideways action, or a pullback, and then to see support and buyers step in and ultimately push this thing higher. But right now, really not providing much of a pullback opportunity in the broad markets over the last couple of days, just continuing this vertical action straight up and getting out of this recent downtrend line here. So big test for the S&P. What do we do at 4,500? Are we able to reclaim that 200-day? and 40-week line. So 4,500, a key level to watch on the S&P next week. QQQ, that key level is 350 right here, or this 351-ish area right where the 50-day moving average is. So just like 4,500 is a big level on the S&P, this 350 level is a big level on the Qs. And so we want to see, can the Qs possibly reclaim this 350 level, reclaim the 50-day moving average, and turn that into support? That's what we're looking for here on the Qs. Say it were to pull back into next week, you'd want to see kind of where this 21 and 8 are hooking up, potentially offer some support, which is roughly 340-ish on the QQQ right here. Moving along as we run through these, DIA back above the 50, just like the S&P more or less. 8 and the 21 hooking up below, just as we saw on the S&P and the Qs. And same level for QQQ as we got for DIA. What happens when we get to 350 here? This is right where the 200-day is. For the Dow, only about a little less than 1% above. That's the key level you want to see here. Does it get rejected? Is it able to get above? And that type of thing. Same story as far as support. If we pull back next week, you'd want to see some support around where this 21 and this 8 are hooking up. And mid caps and small caps, we'll move quickly through these here. MDY back above the 50 for 2 consecutive closes, noting that the relative strength here continues to kind of angle upwards. MDY 2 closes above the 50, all the other major indices, or the DIA and the SPY, only getting their first close back above the 50. And then lastly, IWM, same thing, reclaiming this very, very important 200 level. I know we've talked about that a good bit, but getting back above that 200 level and back above the 50. This is the first time that small caps have been above the 50 since last November. It has been 4 months since small caps have been above the 50 nearly. So big time changing character. And this is what I mean. This is a changing character for small caps. Has not been able to do this in some time. For the time being, showing some signs of life. So let's go ahead and go straight into the 21 over 21. And before we actually start looking at some of the names, which I know you can see down here, we're going to look at the names that got removed. So LMT, the first name that got removed, as you can see, just slightly below the 21 here, had a very news-driven week with some order that I believe was cut in half or something along those lines. But LMT slightly below the 21, so this one has come off the list. A couple more that are coming off today. LNG, nothing wrong with it right here on the 21 at all, but we have a good bit of oil exposure in the 21 over 21. We're still going to have 2 or 3 names in there, so we're just reducing that oil exposure as we see some of these other sectors and areas of the market come to life. So this doesn't, by taking LNG off, doesn't mean that oil is doing bad or anything along those lines. It just means we want to be inclusive of other sectors as they come a little bit to life here. So ADM also coming off. Nothing wrong with this chart either. We just already have CF, which is in the chemical and agriculture space, very similar to what ADM does here. And then lastly, MPC, another oil name, showing some relative weakness recently, is going to come off and be replaced. So your 4 names coming off this week: Lockheed Martin, LNG, ADM, and MPC. Now let's start going through the names that stayed on. And at the very end, we've got the 4 names that are being added. So Costco, our biggest individual stock position in Grotection, continues to act very well after this little consolidation in this area here, just kind of making its way up right here, very close to challenging this 571.49 pivot here on Costco. Moving along here, FCX, the king of nasty shakeouts here, as you can see, but bounce off the 50, right back up very close to recent highs here on FCX. GFS, the new merchandise leader, as you can see here with the volume and the vertical bars over the last 3 or 4 trading sessions, trading right at its all-time highs, slightly above it, as you can see. Pretty phenomenal action, although it is very volatile from GFS. But this is a company that's profitable. This is a company with very substantial revenue numbers as well. So although it's a new IPO, this is not a young in the earnings and revenue life cycle type of company. They've got big revenue and decent EPS as well. So moving along here, PSA staying above the 21, although not a pretty candle today. Nasty shakeout this week like many names had, but back above that 21 there. We're going to keep scrolling through here. Union Pacific, just continuing to kind of flag here above, right, respecting this 8-day more or less, as you can kind of see there, continuing to close above that 8-day, but continuing to trend higher as well. Dollar Tree, just kind of similar to what you saw with Costco, a little consolidation and then just shooting up and continuing out of it. This one, however, already broken out past that recent pivot of 149.37 there. LNTH, a new name as far as in regards to its big time relative strength, really got on a lot of radars with this big gap. They raised raised guidance big time. This one continues to just ascend higher, not really closing below the 8. You got 1 day right here just slightly below, but continuing to ascend higher on LNTH. HAL, which we do own, and you see the little flag there, can pull back to the 21, decent bounce here, back above the 8 with 2 consecutive closes, can't complain about it. PanW, one of those that had a pretty brutal shakeout, but 4 straight days up, just like the market more or less, right back close to all-time highs here, not too far off from it. NEM, acting pretty well, looks very similar to the GDX chart, which is your gold miners, but pull back to the 21, nice bounce, kind of consolidating here as the 21 and the 8 are kind of coming together. Nothing wrong with this chart whatsoever. NUE ended up finishing green today, although it was a laggard almost all day long, but back above the 8 here and continuing to trend higher, making higher lows, and the 21 keeps moving up along with it. Arch Resources, this is a coal company, but as you can see, just like a lot of the other charts I'm showing you, pretty steep pullback to the 21 and then a strong rebound and recovery off of it here. ABBV, just incredible relative strength. Some of these healthcare / medical drug companies like Pfizer or AbbVie, Regeneron have really gone on some lockout moves where they've had some big time, they've gotten extended, but big moves over the last 5 to 7 days, pushing them into even more extended land. ABBV, no exception there. BRKB, Berkshire Hathaway, also continuing to trend higher. You can see the relative strength on this one, more or less angling up all year long and continuing to act well. ZIM, small pullback today, but hasn't even made it back to the 8-day, got pretty extended there. So we are watching this one closely, possibly for a retest of the 21, but a pullback in shippers, or in this shipper particularly, CF, which we do own, pull back to the 21, looks like a nice bounce and back above that 8-day there. DVN, an oil name here, similar to a lot of the charts I'm showing you, nasty shakeout to the 21 or maybe to the 50, maybe even an undercut of those like DVN in this case, and then a strong recovery. This is what a lot of individual stock charts look like over this past week. Now, moving to the names that have been added. Number 1, PSTG, incredible relative strength since the gap up. So excluding the gap up and the skew that might have on the RS, look at what the relative strength line has done since the gap up. Just continue to go straight up. It's respected the 8-day while the market was in a little bit of turmoil. So big time relative strength from PSTG, added that one. NVIDIA, we do own in-house in Grotection. Big time downtrend line break here, back above the 50 for the first time in a while. Added this to the 21 over 21 list, now with 3 consecutive closes above the 21, something it hasn't done in quite some time, really since the beginning of the year. And last 2 here, we added Bros to the 21 over 21 list with these 2 really strong candles. This one continues to put in a more constructive base than most other growth-related stocks have, but nice action here out of Bros. And then lastly, Sedge, which we did buy today off of this nice reclaim of the 21 here. Sedge added to the list as solar continues to act well and show some pretty big strength in the market. So that is going to wrap up the 21 over 21. And my last thing I'm going to show you is I'm going to show you the charts that Don reviewed at the end of his video last Friday, which is the G5, G6 type of ETFs. And last week on Friday, it looked like they had a brutally just awful rejection at those moving averages. But I just want to show you how much difference a week can make in what those look like. So here's last Friday. Okay, here we go, 311. And so you come into this week and you gap down even further, but then you get 4 straight up days. So some of these charts that looked really bad, and granted, a lot of these are still pretty broken charts, but just in the matter of a week, we went from being here to being here above the 50-day. And I'll show you some more just to give you an idea of kind of for what I'm talking about here. ARKK, very similar, back above the 21. This is an ETF that has not closed above the 21 since November. But today we did close above the 21 on ARKK. So just to show you that a week can make a big difference, and these are some pretty big changes of character in these ETFs. It may only last for a week or two. It may be less than that. Who knows? But for the time being, some pretty big volume, as you can see here, and some big time changes in character. And just to kind of further evidence, I talked about this in good detail in the podcast, so check that out. But Tesla back above the 21 for the first time in nearly 3 months, and Nvidia, like I said, back above the 50 for the first time in nearly 3 months. So some of the big time stocks showing big time changes in character, worth paying attention to. So that's going to wrap up Friday's video, everybody. I hope you enjoyed it. If you have any questions, please send me an email. And like I said, I'll happily answer them. But otherwise, I hope you enjoy the podcast this weekend. I'll see you on next Monday's video. Have a great weekend, everybody.